Gold has just crossed $5,000 an ounce for the first time in history, and this move is sending a powerful signal across global markets. The rally isn't happening in isolation. It's being driven by geopolitical upheaval, currency weakness, bond market stress, and growing fear among investors. Let's break down what's really going on and why gold and silver are exploding right now. Gold surged beyond $5,000 per ounce, extending a blistering rally fueled by President Donald Trump's reshaping of international relations and a global flight away from government bonds and currencies. Bullion jumped nearly 2%, reaching around $5,085 as the US dollar weakened sharply. In just 6 sessions, the dollar index has fallen almost 2%, raising concerns about currency stability. Adding to the pressure, speculation is growing that the US may assist Japan in strengthening the yen, sparking fears about Federal Reserve independence and unpredictable policymaking. Silver is moving even faster. Silver surged more than 5% to a new record high after crossing $100 an ounce in a previous session. Demand is coming from both institutional investors and retail buyers. From Shanghai to Istanbul, platinum and palladium have also hit record levels, signaling a broad-based move into precious metals. Gold's rise reinforces its historic role as a barometer of fear. The metal has more than doubled in just 2 years and is already up over 17% this year, following its best annual performance since 1979. This surge is being driven by what investors call the debasement trade, a retreat from paper currencies and government debt. A massive sell-off in Japanese government bonds last week highlighted growing investor resistance to heavy fiscal spending and rising public debt. Recent actions by the Trump administration have added fuel to the fire. These include public attacks on the Federal Reserve threats to annex Greenland military intervention in Venezuela and new tariff threats against Canada over a potential trade deal with China over the weekend. Trump warned Canada of 100% tariffs on all exports to the US, escalating trade tensions further. Meanwhile, political uncertainty inside the US is rising, with the risk of a partial government shutdown back on the table. As one portfolio manager put it, gold is the inverse of confidence. Gold acts as a hedge against unexpected inflation, sudden market crashes, and geopolitical flare-ups. That's exactly why investors are rushing in. Another major driver is soaring government debt. Across advanced economies, debt levels are ballooning, pushing long-term investors to seek protection. Family offices and institutional investors are increasingly viewing gold as a way to preserve generational wealth rather than chasing short-term returns. Prominent investors like Ray Dalio and Ken Griffin have previously warned that gold's rise reflects deep structural problems in the global financial system. Investors are now watching closely for Trump's pick for the next Federal Reserve chair. A more dovish appointment could lead to additional interest rate cuts, which would further boost gold, since the metal does not pay interest. While analysts warn of short-term pullbacks after such a strong run, many believe the long-term case for gold remains intact. As global uncertainty rises, one message is clear: gold isn't just rallying, it's warning.